Alright guys, glad to have you on board again today. We have to do this. The DENCUN upgrade has happened and I simply couldn't find the time to record before that. But it has been the massive game changer as we provided information long before. We've reviewed that week after week in the weekly updates in the TradingView platform to just said DENCUN upgrade sets the stage for massive disruption, both in the Ethereum landscape, but the general crypto markets, of course. And today is a deep dive into this. Of course, I'm not going to go through the technicals themselves for the very simple reason that I think that it has been very well covered actually in the general crypto information schemes. That's once again one thing that I like, particularly like with the Ethereum ecosystem, it's the quality of the people talking around that. So I think that for those who are looking for the real technicals of these newly introduced blob space and all the fundamental and economics at play, I think it is very well covered already. That's the reason why, despite doing yet another video around that, I'd rather like to add another piece to this puzzle through the point of view that I have in here, which is longer-term value assessments, crypto economics, fundamental shifts, and what it is expected to do for crypto investors and long-term forecasters. We're not doing things on what's going to happen in a couple of weeks or whatever. We're not doing this here. So what are the long-term expected fundamental changes in the crypto landscape, in your personal portfolio expositions or so? And we're going to review this through that lens. So first of all, just a quick recap for those who are not very familiar with the longer term analysis that we do regularly. Just going to do it in here very quickly, TLDR, if you want a deep dive review of the technical structure for Ethereum. Plenty of information out there on the previous videos recorded, but just TLDR in here. So the underlying structure of Ethereum, looking at the longer term time frames, just can't be cheated. Remember, when you're looking at something above weekly or monthly charts, there are very limited chances you're looking at a fake stuff, just because the structures, the underlying price structure you have on these larger time frames can hardly be faked, due to the very simple reason that we've seen speculative bubbles and absolutely outrageous valuation in the market over the years, and it happens regularly, but the thing is that those overvaluations rarely last more than a couple of years, 3 years at best. So you might still see some absolutely bonkers type of price valuation in the short term. You rarely can have them live through the weekly and monthly chart. So we make that assumption once again. It isn't a guarantee, but it is a fairly high risk limitation in this perspective. So we look at the price structure. Remember, that's what we do. That's what I do in here when I look at those longer term charts. My strategy has been entirely built into assessing price structure correctly and trying to figure it out if there are repeatable patterns through any types of markets, trying to underline these value structures and how do they play themselves over time. So basically, what we apply in here when we do these things into Ethereum is that the end game response for this is that we have a wave 5 extended potential structure. Repeated by consecutive breakouts, we see significant retracement afterwards while still maintaining the value as always being positive, aka breaking out, retracing to the somewhat breakout level while still maintaining a raising a moving average and prices not falling below. That means price just can't stand below that rising moving average. And then you see a second breakout, which means the first one could very well be a bubble. Remember, bubbles can last for 2 years, but they collapse. But if you do a second bull run, that means this one just can't be faked out of nowhere. Okay, you can't fake out the data like we've seen with Solana on yesterday's video, where everything, or not everything, but 80% of the data is purely faked. So we'll see if Solana is playing its game through these fake data points and starts to emerge value after multiple cycle, which for now isn't a guarantee. But for Ethereum, we have that response already. We have the answer to this question. Ethereum isn't full of shit. It might have been a 2018 ICO bubble, but it turns out to be more than that in the future. The structure we see is that the second attempt follows suit with the wave 5 extended structure we have, which means the second breakout as well fails to set a trend. It wasn't the kind of super trend or super cycle which I myself even fell into back then. It didn't really happen. We corrected violently back down to the same rising moving average where ended up being the bottom, and that's really how it is. That means the trend is still there, it just takes an alternate trend structure. So that's really the way to go. We might have gone too far too quickly into the future, but the wave 5 extended still says that the third breakout is going to be the one that succeeds. It's going to be the most violent one in the series. This one will be excessive. It will break out and trade above the moving average of consecutive previous stops. It is also going to report more than the actual range that precedes the final breakout, so a 1-to-1 ratio to the upside, giving us at the current times a bare minimum expectable value for Ethereum to be above $9,000. That doesn't necessarily mean that we're going to have to do it now, and remember that this is what the structure says. When we break the all-time highs for Ethereum, expectable minimum return afterwards for the value is $9,000. That means prices can go far above that level, but the value will probably expect it to sustain over time above those $9,000. So remember what that says. That says it isn't a 100% guarantee. If you bet it all on Ethereum just out of what I just said, remember that this is just statistical occurrences, risk limitation of potentialities to be wrong with that assumptions that are clearly not 50-50 here. That is said that if correctly applied, what we can expect out of this technical analysis is this, and that's all there is. And remember that if we couple it with what we just said earlier, the second standpoint is to say out of these weekly, monthly charts, there's no way you can cheat out the value. Okay? So that means if we want to make that weekly and monthly breakout, the third and final one, we don't know when. We know one thing for sure, it can't be faked out of nowhere. It has to be fueled by a fundamental catalyst. If this one is expected to be the final breakout of Ethereum, the one that changes the game to the point that the value is multiplied by 2 or 3, it needs to be something big. All right? And I've always put it out myself in the spotlight to say, I think DENCUN upgrade is this fundamental disruptive catalyst. And I'm going to argue about the reasons that led me to this. Though the first one, like I said, is the technical. Despite whatever I can say and how much I can dig into the fundamentals and the economics of every ecosystem in crypto out there, I always look at the charts first. If the chart doesn't say that is possible, I don't even go further than that. For Ethereum, everything says if we break the all-time highs for the third time, this one is going to be the real one. So long as we don't dive back down below this rising moving average, that will be my assumption. Currently, Ethereum is trading at the top of this range. It's traded above the resistance context, so it is well suited for this breakout. We actually already have the cycle breakout supporting all those theses. So technicals are green light to go all-time highs for Ethereum. Are we going to do it or not? Like we stated, the final piece to this puzzle is we need a fundamental catalyst to support that thesis. And now let's go through the history of Ethereum. Okay, so as you can see in here, in the history, August 2021, one fundamental preparation for what happened into DENCUN has happened. That was the introduction of EIP 1559, aka introductory burn system into the block space bidding system. And so basically now we're going to burn some of the transaction fees to compensate for the net emission. As back then we were still running with the proof of work chain and the beacon chain, of course, in parallel, basically we still had to pay for both the proof of work and the proof of stake emission at once. Of course, once we had the second very brutal fundamental change in the underlying Ethereum ecosystem economics was the introduction of the merge, which basically terminates the net proof of work system and its emission along the way, which has fundamentally changed the emission of the supply. It has gone from inflationary for somewhat like a 2% or more to net equilibrium, slightly deflationary as well. So this is very, very critically important, is to say that if we have a look at it through the lenses of history since the merge, okay, since the merge, it's been basically, okay, deflating at a rate of 0.25% a year. So as you can see, this isn't deflationary like fucking crazy. It just means that the net offset created by the actual burns against issuance, which means real revenues going to stakers, this is still net deflationary for the chain. It's basically running at an equilibrium. Remember, minus 25% isn't crazy deflationary. It just means it's operating at a net equilibrium. So one thing for sure is that I think DENCUN is going to change some of this actual thing. It is actually expected to see the inflation going right back down to some neutral, eventually even slightly inflationary, as the layer 1 activity is migrated to layer 2. That means less constraint on the block space for Ethereum layer 1, because we've seen that in terms of kind of balanced demand and supply for Ethereum block space, we were kind of operating net neutral. And we've seen those phases in here where you see the net emission is somewhat flat. And these huge deflationary period, which account for most of these periods, as you can see, they are high demand for network. So if the demand is switching to layer 2s now, which are much more scalable block space, which we're going to explain a bit about it, it might change the fundamental economics of net issuance for Ethereum. So that's one thing to account for. It's been undermined, but I think we might reasonably expect that these huge deflationary periods in the Ethereum history are less likely to happen in the future. So I expect some more of a net neutral emission for Ethereum. So sorry about the ultrasound money narrative, folks. I think this DENCUN upgrade is going to have a long-lasting impact on this, potentially putting Ethereum right back into some more balanced issuance, so not necessarily deflationary durably. So that's something that we're going to have to look at. But the second thing to understand is in the general crypto market underlying price structure. It just means, well, if we look at it, Bitcoin and Ethereum are the long-lasting winners. Remember that in here we need to apply the Pareto type distribution laws, which means there are some several different layers of potential interest by market participants due to network effects. That means some clear leaders have some significant advantage that the probability to see them and these mechanics being reversed are very, very limited. Though this Pareto type distribution means so long as you have what we said earlier, in terms of market share distribution, the Pareto type power law dictates that the leader of the market does take Pareto type efficiency asymmetries by the fact that it takes more than 50% of the market share, where the second in line doesn't take more than 30%. Okay, so that's really important. That says the leader has more than 2/3 against what the next in line does have, and that's exactly what we see at play when we look at the fully diluted market cap. Currently, Ethereum is at is neck to neck with Bitcoin in terms of competition. Remember that these lines, as they are drawn, are followed by these things. So if we look at the crypto ratio, Ethereum to Bitcoin is trading in this 50 to 30% ratio. That means you take the share of the follower against the leader. The current leader is Bitcoin, though we're looking at Ethereum's shares against Bitcoin market cap. So Ethereum currently weights 32% of Bitcoin. So in Pareto type laws, we have those zones, those areas of interest. If you are in between the 30 to 50 area, that means you're a legitimate, you're a direct competitor, which means you are really there and you have the potential to change the game, to reverse the table. That means if we positively get out of this, meaning breaking out 50% dominance, or 50% of the market shares for Ethereum against Bitcoin, that is the sign that the challenger is trying to take over. That doesn't mean it will succeed, because 100% is it means equally balanced. That means Ethereum is weighed just as much as Bitcoin. Being above is basically the flippening. So can we truly see a flippening in the following years for Ethereum? Absolutely not. But can we try to go there? I think there are significant probabilities of this to happen. And the reason why I'm talking about it is because trading positively out of this rising moving average could be one factor leading to this. I mean, Ethereum breaking above the 50% limits and doing it durably with ascending bottoms. If we do this, positively reacting with trend signal on the rising moving average, that would be the sign that I'm looking for to say, I don't know when, I don't know how fast, but I think Ethereum will start to challenge Bitcoin. Is it going to succeed flipping it? I don't necessarily think so, at least not in the foreseeable future, not in the 2 to 3 years time frame horizon which I'm in. Of course, remember that in these kinds of systems, you can hardly predict how fast the momentum could go. So it could still happen in a couple of years, but I don't see this happening now. And first of all, I need to see the validation of that thesis. That means at least closing above the 50% context line. So we're not yet there, just raising the assumption that the fundamental changes Ethereum are going in through now might be the actual fundamental catalyst to trigger the Ethereum's price breakout into all-time highs, sustained by value, supported by fundamentals, and it could lead to what I've said for a long time now: Ethereum could overperform Bitcoin. And if it happens due to the DENCUN aftermath, and if it performs out of this 30% bottom area on the rising moving average, that is a sign to me that in the distance, Ethereum will try to trade all-time highs against Bitcoin in terms of dominance. That means Ethereum will try to trade in historical territory above the highest ever printed ratio between the two, which was at 70%. Ethereum market cap over the Bitcoin ones. So I think that's what could happen if and only if those signals validate. DENCUN, I think, is the catalyst that's going to push this to be proven right or wrong. It is a fundamentally bullish catalyst for Ethereum. So I think this is really what needs to be asked. Okay, the second thing that is very critically important to figure out is that if we look down the line in the speculative cycle in here for what we have, we would see that there is no legitimate competitor for now to Ethereum. Okay, that means there is no one that is trading at least 1/3 of the Ethereum market shares. The next in line would be Solana at a fully diluted market cap of $108 billion. We've made a video about that yesterday regarding Solana's shaky fundamentals. They're very highly speculative demand for this token, and just like it has been entirely fucked up in 2021, the second attempt breakout for Solana better have to be supported by adoption, because otherwise that's just another fake out and it's going to be proven wrong. So I'm waiting and carefully looking at Solana as being a potential competitor to Ethereum. And if you got the lesson earlier, that means we're going to have a look at one chart. That's the Solana to Ethereum. Is Solana a legitimate competitor to Ethereum? That means it would be trading inside the 30 to 50% market share. I don't see that happening. I think Solana is trying to test that thesis. I think it's going to go there and violently reject. I don't think Solana is a legitimate competitor to Ethereum, not nearly close to it. But I don't think we're nearing the end of that series. I think right now there's full of shit discussion regarding Solana and so on. I think it's going to be blatantly proven wrong. Because on one end we have supported fundamentals and the other one fake data, or at least 80% of fake data. The second market is, I think this is the wrong question to ask yourself. Is Solana a competitor to Ethereum? The answer clearly is no to me. All the fundamentals prove this is simply not the same game. But some of it might not be wrong, because I think the competitor to Ethereum, to Solana, are actually the layer 2s. And what we are doing now with this fundamental change of DENCUN and this emergence of this new block space is a significant shift into the layer 2 landscape. So I think the battle between Solana and layer 2s is just getting started. And that's the real battle you want to have a look at if you're a fundamental longer-term investor, not paying attention to the short-term noise and speculative behaviors. This is what you need to pay attention to. The layer 2s versus Solana, because the battle in here will be outrageously important and critically that's where you need to have a look at. So the supportive thesis for this is this as well, is to say, if we were looking at it, we had direct competition between Bitcoin and Ethereum. That's the reason why looking at the ETH to BTC ratio kind of makes sense. But if we look at the scalability axis, where I think layer 2s and Solanas are in direct competition, these are the ones you should have a look at. Is Solana able to compete with Ethereum? I don't nearly think so. They're not playing the same game, and I don't even think for a second that Solana will last at its current market cap. At least, that means I think Ethereum will outpace the Solana's growth by a large margin in the future. So that's really the way to go. Now, this axis will have very interesting battle. Between one end, you will have transactions per second, kind of trying to extract as many TPSs as you can, and on the other hand, maximizing daily active users. actually onboarding new users into the blockchain space and trying to have them repeat operation, not necessarily having them degen buying some shit coins 10 times a day and rotating into some stupid speculative dog shit, but on the other hand, kind of trying to bring real DeFi use cases for the masses and having them perform some more decentralized way, non-custodial kinds of perspective, using all the Ethereum tech stack with this, which means account abstraction and now very cheap transactions, very cheap transaction cost. Because frankly speaking, for now and for the latest couple of years, we've seen these layer 2s emerge as a viable solution to scale Ethereum, but there was still one remaining problem into the scheme that was basically it's way too expensive compared to competitors who are basically trading at a fraction or at a few cents per transactions. When on the other hand, trading even in the layer 2, not even mentioning the trading cost in layer 1, was still prohibitive for most people. It was kind of 50 cents for a swap or so. And as we stated before, the numbers themselves pulled out by the Ethereum guys was certainly not like the shit liars of Solana guys trying to sell you stuff out of fake data. They did their math. And once again, I had very high level of confidence into this math. And turns out that now we have it. DENCUN has been pulled itself into the mainnet, and we have the real numbers. And they are even better than these guys calculated. So once again, they haven't lied. The data is what it is. It was predicted to be above 90% reduction of transaction cost into layer 2s. Well, now let's look at the data itself. Well, numbers are here. They don't lie. Just like we stated, 80% fake transaction in Solana. In here, these are real numbers. You can hardly dispute those. And you can see how fundamental the change is. Basically, layer 2s have had different kind of layering strategies, but net kind of their operating cost before this DENCUN upgrade was somewhat of an average of 50 cents per trade. So that's basically how it was. Okay, $0.50 for a transaction cost into these layer 2s, like we stated earlier, fairly prohibitive considering large-scale adoption for those systems. Not everyone was willing to pay 50 cents for a decentralized execution. But now, as you can see, DENCUN has happened and boom. It has been implemented sequentially by different orchestrators of layer 2s, and as you can see, it's been gradually one by one going nearly down to zero. Now that we're here, few days after it, as you can see, linear is still not yet there, and you see some different perspectives. So we clearly see two camps in here. Some who are now operating at someone like for Arbitrum, 10 cents a transaction, so long as well in here goes for zkSync era, which is somewhat of a 6 to 7 cents. So we see these two guys, Arbitrum and zkSync, who's been reduced for 90% somewhat, and something more actually, because that's what it is. But these guys are around the 90% reduction that was predicted. But for the other guys, those who are in the bottom of here, is just staggering. They've been going from 50 cents to fraction of a cent. You've got, for example, OP mainnet now operating below a cent. So that's really enormous. Remember, 50 cents on average before the update, and now less than a cent. That's a 50x reduction, 50x plus reduction. And it's not just one isolated candidate. OP, Stocknet, Zora, Base, they all operate below a cent. They are now in direct competition or even cheaper than the Solana stupid blockchain. So that's really, really, really crazy thing. That means, of course, that there must be a trade-off, because the difference is that, of course, there will be the supply and demand mechanism at play in here for this blob space. So it isn't yet settled to say Solana is going to die, the layer 2s are going to take over. Remember, there's going to be a battle between the two. Now we're just a few days after the upgrade, so we don't necessarily see the full mechanic being in play. That means one thing, in that scale, Solana has one significant advantage compared to these guys. That means Solana has history to back the claims. These guys are just brand new to the town of very cheap transactions, and the underlying mechanisms at play, the economics of supply and demand for these new blob space, is going to have to be broken down and understood. And that's really very important. To look at it, we'll look at this, which is a new dashboard which we're going to introduce now, and to our regular weekly updates, to look at the overtime dynamics of these newly introduced block space. Remember, we're not going to look at the technicals and what it is and what are the fundamental differences between the blob space and the layer 1 block space. It is very well documented, and there are some trade-offs. Remember, this is what data availability is in here to compensate, among others. So it isn't as secure as the layer 1. Just like we said it all the time, Solana doesn't nearly produce as much security as Ethereum. It's nothing to be compared. Layer 2s as well do introduce some trade-off. But now, we need to understand the actual supply and demand mechanism for blobs. Blobs are limited to a certain amount of blobs per block. Okay, as you can see in here, there is a limitation to 6 blobs per block at a maximum. That means we can't go anywhere above that. The current supply and demand out of the data we have in here, remember that's over weekend data, so this is very weak demand for these things. We see that it's kind of flat oscillating, which is great. Remember that I want to see things going up or down like crazy. Ranges are this kind of static, durable kind of mechanisms to forecast the value being below these metrics. So we see that it is somewhat oscillating between a higher demand average per hour of 1.52 blobs per block, and on the more lower demand moments, it is at down to 0.50. So that's really the way to go, between 1.5 to 0.50, somewhat like a net average of 1 blobs per block, with a 6 max capacity, which means currently the network is operating at a supply to demand mechanism, which is well suited. That means there is less demand than the available supply of 6 blobs per block. So everything's fine now. That means the cheap cost that we see now on these layer 2s is because there is not a constraint between the supply and the demand. But what is going to happen when, of course, I think inevitably down the line, we will have more demand for this blob space? It will increase the price, and the same old bidding mechanism is at play here. That means if there is a constraint on the available 6 blob supply and the demand outpaces that available supply, prices will up. So that's really the way to go. It's also importantly critical to understand that the Ethereum base layer cost is at play in here as well. If Ethereum goes up, the price of GUI, which means a blob base fee, is one way, but if you increase the dollar price of Ethereum by a 3 to 4-fold, as we've seen, the expected value of Ethereum with value under the Wave 5 extended structure is above $9,000. That means it is 3 times above the current prices somewhat. So that means the current expected price of below 1 cent per transaction on these layer 2s, also accounting for not outpacing the available supply. These are very important 2 factors to combine to say if we multiply the price by 3 or 4, that means these below 1 cent transaction can somewhat go to 2 cents or above, or somewhat like that. And now if we add up more demand than the available supply, that means true demand to supply mechanism will increase. That means the variability of cost into those layer 2 might be playing its game through constrained supply, just like it did back then in the 2021 scalability issue for Ethereum. So don't get me wrong in here. That means the blob space, currently as it is, might see some variable prices, and I think that's the trade-off that says layer 2s are not nearly going to kill out Solana. I think Solana is here to stay for a long time as being the legitimate competitors to those layer 2s until they find market fit. My system itself is evolved into a system now that I'm starting to figure out an additional layer on top of this kind of star system in here with branches. I think the top 3 branches in here being what I think is the Cosmos ecosystem, Cosmos Hub AEZ, favoring interoperability public goods, as it is for layer 1s, maximizing daily active users and user onboarding with account abstraction and all those sorts of things that are going to be available into those layer 2s now that they have non-prohibitive transaction costs, but still going to have to be assessed over time to see how competitive they are against Solana. Also accounting that Solana might be figuring its way out with its own kind of improvements to the chain to further kind of maintain these very low transaction costs as the chain scales. So interesting battle between the 2. Like I said, I might have been very critical on Solana the other day to just bring up some more nuance to the overarching majority of over bullish stupid sentiment that I see out there currently. But don't get me wrong, Solana is here to stay. It really is. And the battle between the two is where people should focus their attention instead of stupidly trying to market Solana against Ethereum, which doesn't nearly make a sense to me. But the truth is, this is where I think another layer is at play. These three guys is what I call now the margins guys. They are the ones able to take high margin. Okay? On those decentralization, scalability, and security access, I think three assets in here are the ones able to extract the value. I don't yet know on this axis which one of these two is going to be. Like I said, I think that's what DENCUN is the big challenge in the future for this, to figure out the battle between Ethereum and Bitcoin, who is going to be the one taking and maintaining the lead. DENCUN might be the game changer, eventually in the distance putting Ethereum to challenge Bitcoin's dominance and eventually taking the lead. And if that means these are the guys with the high market caps. If that isn't the case and Ethereum remains silently into the 30-50% mark of Bitcoin or drops below that, that will be the sign that these are the three guys who make the money, okay? And these are the three guys who operates kind of the numbers, but at a far less value extraction. That's where I say these are the guys you can invest into. These are the guys you basically trade. That means timing in here is essential. Investing in here, meaning just compounding value over time by taking some margin extracted out of the market. Legitimate margin, of course. Remember that if you're trying to maximize the margin beyond a certain threshold, you're getting to get yourself out of the competition because some others will be able to eat away into this margin. Remember that Pareto type distributions are not something that can't be reversed. It's very hard to reverse. So this is the final assumption that I have, and therefore this is all I wanted to talk about today when it comes to this DENCUN upgrade. The first thing to understand is that the numbers are staggeringly even better than anticipated, but it comes with a trade-off. Remember, layer 2 scaling solutions are technically inherently different than layer 1 execution. The cold data versus blob space do introduce some significant trade-offs. But these are the same trade-offs that Solana has made anyway. So I think they're definitely in line to start a legitimate battle between the two. Solana was the clear leader in scalability so far. Now it's no longer. Solana will have legitimate competition coming from very well-financed layer 2s with a lot of money, a lot of VC money as well, a lot of cash, a lot of marketing teams behind that. The base, the Arbitrum teams, the OP teams, and the other ZK technologies as well are very well funded, way more than actually Solana is. So I think the battle just got started. The real battle is here, guys. Don't get yourself fooled by the Solana crowd just trying to play the same old stupid Ethereum killer game. Ethereum is here to stay. It already killed everybody in the competition. Now it's a layer 2 versus Solana game that's just started. And now I would tend to say the momentum is going to be on the layer 2s, because now the layer 2s have just had a recent significant shift by finally getting in line with the very cheap transaction cost of Solana execution. So that's what really this is all about, guys. But it's not just about the layer 2s themselves. In the distance, we're going to have to figure out the battle that is still pending between Bitcoin and Ethereum. That's really all there is to know with the DENCUN upgrade. That's all that we're going to very carefully look at in the forthcoming distance. These are the things that won't settle themselves in a couple of days, nor in a couple of weeks. These are longer term charts, kind of trends that we're going to have a look at. But I wanted to take the appropriate amount of time to underline all the ingredients in this recipe. There are a lot of things that's out play in here, but the actual symmetries in here that really should focus your attention are these two. Okay? Stop focusing Solana against Ethereum. That's a bullshit trade. Start looking at Solana versus layer 2. This is where the real game is at. But regarding Bitcoin and Ethereum, the game hasn't been settled yet. Either Bitcoin will take on its supremacy again. That means Ethereum will start breaking out of this 30 to 50% area to the downside, and that will be the sign that Bitcoin is restoring its supremacy despite Ethereum's biggest ever market scaling solution. That's one thing to understand. It can happen. But on the other hand, like we stated, we're on support territory with a rising moving average and signals suited for a positive reaction out of this. And if we react positively by holding support on this 30% area, the next area to go by is the challenge 50%. I'm not saying that this will be a success. All I'm saying is a positive reaction out of a rising moving average, aka we may stay there for a long time. And if that's the case, and if we dive below the moving average, then all I'm saying here will be non-viable. So if Ethereum doesn't take this support by 2026, then that means what I say here will be non-viable anymore. But if we succeed out of this, maybe we can take another year to get there. But if we go by 50, by holding on above this moving average, that's the sign to me that the probabilities of successfully getting out of the 50 area this time around with ascending bottoms will be more significant than the probability of rejection. And if that happens, and if Ethereum successfully, with the improvement of Ethereum scalability, layer 2s and so on, if this is successful, that's the other battle which I will be looking for. I think the Solana versus layer 2 is an immediate battle. This one will be started today and will rage into the coming month. But the fundamental battle between Ethereum and Bitcoin got started in here as well. But it's not going to produce any results anytime soon, at least not that I think of. But it's a battle that keep in the back of your head for the distance. That being said, that's going to be all there is to know on my end regarding these big implications on the fundamentals and general crypto markets for this DENCUN upgrade. That being said, I'll see you guys later. Bye-bye.